Hello and welcome to another edition of Capital Market Live on Channels Television. I'm Willie Bong here in Lagos, and first, let's check in on the markets. We start with Europe, where stocks closed lower on Friday following a rollercoaster week for global stocks as investors digested the Dow U.S. jobs report. The FTSE 100 ended up 0.25%, while the German DAX and French CAC 40 indexes fell 0.29 and 0.61% each. Markets have fluctuated hard over the past week as global investors assess the possibility of persistent high inflation, with U.S. bond yields driving jitters for growth-oriented tech stocks. In corporate news, Ireland relinquished its opposition to new global corporate tax rules on Thursday, agreeing to forgo its 12.5% tax for large multinational corporations in a key development for efforts to install a worldwide minimum rate of at least 15%. Meanwhile, on the data front, Germany's trade balance for August came in at a positive 13 billion euros on a seasonally adjusted basis, slightly below a forecast of 15.8 billion euros. Over to the Asia-Pacific, Chinese stocks rose on the first day of trade after a week-long holiday, tracking other stock markets across Asia-Pacific as markets on Wall Street rallied. Data on Friday also showed that the services activity in China returned to positive levels. Mainland Chinese stocks paired earlier gains but were still higher by the close of trading. The Shanghai Composite was up 0.67% to close at 3,592.17 points. Hong Kong's Hang Seng Index rose 0.55%, while Japan's Nikkei 225 rose 1.34% to close in the final hour of trade. Now to the U.S. markets. The Dow was little changed on Friday, notching a winning week as optimism about a short-term debt ceiling deal trumped a disappointing jobs report. The Dow Jones Industrial Average dropped 8.69 points to 34,746.25 points. The S&P 500 fell about 0.2%, while the tech-heavy Nasdaq Composite fell 0.5%. The major averages all ended in the green for the week. The Dow rose 1.2% for its best week since June. The S&P 500 rose about 0.8% for its best week since August, while the Nasdaq rose just shy of 0.1% since Monday. Energy stocks plowed high on Friday as West Texas Intermediate crude futures, the U.S. oil benchmark, crossed $80 per barrel on Friday for the first time since November 2014. Uncertainty around the debt ceiling had been a headwind for the market, but other risks remain, including accelerating inflation and rising rates. Meanwhile, Wall Street is preparing for a third-quarter earnings season, which kicks off next week. Back home in the domestic equities markets, bargain hunting in banking stocks was the overarching theme during the week as investors flocked into Tier 1 names ahead of third-quarter 2021 corporate earnings releases. The all-share index advanced by 1.6% week-on-week to close at 40,868.36 points. As a result, the month-to-date and year-to-date gains increased to 1.6% and 1.5% respectively. Bargain hunting in large-cap stocks, FBN Holdings, Airtel Africa, and Zenith Bank drove the weekly gain. However, activity levels were mixed as trading volumes decreased by 1.4% week-on-week, while trading value rose by 34.8%. Sectoral performance closed mostly positive for the week, with the banking index emerging as one of the biggest advances, up by 4.53%. University Press PLC topped the gainers chart for the week. Its share price rose by 28.46%. Cornerstone Insurance PLC, down by 12.07%, led the losers, while the trio of FBN Holdings, Universal Insurance PLC, and Fidelity Bank accounted for 1.16 billion shares, worth 12.34 billion naira in this week's trading session. Similarly, activities at the unlisted securities market ended the week positive as both the NASD OTC Security Index and market cap increased by 0.19%. At the same time, NASD investors gained 1.23 billion naira, taking the market capitalization to 638.39 billion naira this week. However, total volume of securities traded decreased by almost 100% to 10.29 million units, while value fell by a similar margin to 97.32 million naira. Swap Technologies and Telecoms PLC ranked up among the 5 most traded securities by volume and value for the week. The Nigerian Exchange Group led the gainers. Its share price climbed by 22.63% to close at 16 naira 15 kobo, while Afriland Properties PLC led the underperforming stocks for this week. Let's cross over to the fixed income market, where the bond market started the week on a bullish note. However, the bullish sentiment was not sustained throughout the week. The overall average yield closed at 8.13% at the close of trading. The DMO published the fourth quarter 2021 bond issuance calendar on Wednesday, which showed a reduction in volumes offered when compared to the third quarter. Also, the short and mid-dated instruments were changed to the January 2026 and April 2037 bonds, respectively. They were previously the February 2028 and March 2036 bond maturities. At the Treasury bills market, the trading week closed on a bearish note as the average yield across all instruments rose by 7 basis points to 5.9%. Across the market segments, the average benchmark yield for Treasury bills closed at 5.27%, OMO bills at 6.47%, and CBN special bills closed at 6.04%, posting a week-on-week decline of 0.36% for the Treasury bills, while OMO bills and the CBN special bills rose week-on-week by 2.41% and 0.08%, respectively. I have with me this evening to dissect the happenings in the capital market the Managing Director at Kedari Capital Limited, Mr. Abolaji Nuruddin. Welcome and thank you so much for coming on the program.
Thank you very much for having me.
It's good to have you this evening, Abolaji. It's been an exciting week in the capital markets, especially the winning streak observed in the equities market. We've had a 5-day stretch of positive trading in equities. What do you think are the key drivers of the current equity market gains?
Okay, thank you very much. Firstly, I'd say that there is renewed sentiment, like you rightly mentioned, and it's fueled, on the expectations of robust Q3 earnings. However, in terms of specifics, you'd notice that the likes of First Bank, Fidelity Bank, and UPL were amongst the most traded stocks during the week. First Bank, for reasons that would look critically into. First Bank saw its share price appreciated by almost 22% in the market last week, and that was fueled by renewed optimism from investors, particularly with regard to the share buyback program of Airtel Nigeria PLC. So all this drove sentiment in the market, and caused the increase in the prices of these stocks.
Okay, so we're seeing that the benchmark index and the market capitalization both reclaimed the 40,000 level and the 21 trillion mark. I, for one, have been in a celebratory mood. The last time equities achieved this was early this year. Is this a game changer for the market, and what opportunities could it unlock?
Okay, so I'd like to advise that you slow down a bit. It's not Uhuru yet. These are challenging times. What drove the market largely, like we rightly mentioned, were gains in bellwether stocks, of which First Bank led the gainers. However, I think the market as a whole is on the path of recovery. The likes of tier 1 banking stocks like Zenith Bank, GTB, have seen their share prices impaired over time in the last 6-7 months. These stocks are beginning to gain traction, and you'd agree with me that post-COVID performances for these banking stocks have been truly impressive. Also, you'd see that in the last 2 weeks, the likes of Dangote Cement has also increased significantly from around 230 to 280. I think it retraced last week, to 250, 260 thereabouts. But we're likely going to see more rallies in the coming week. especially as the market begins to brace up for the publication of Q3 results, for the period ended 30 September 2021.
Okay, so if we could just hold for a minute then, let's take a quick look at what happened in the market this week. Airtel Africa announced the Nigerian subsidiary, the Airtel Nigeria Network, is planning the process to buy back 8.27% minority shareholdings at 55 naira 81 kobo per share. In a statement released to the Nigerian exchange, the telco giant says the total consideration was estimated to be 61.24 billion naira at the current NAFEX exchange rate of 413 naira 38 kobo, assuming all minority shareholders decide to tender their shares. The company explained that it would make further announcements on the buyback plan in due course. So back to you, Bolaji. What do you think about this now? It's been so much of the thing. What do you think about what's happening with Airtel, this buyback plan? What's driving this? What's the company looking to achieve?
Okay, so it's a win-win for Airtel. I think Airtel Africa is just trying to consolidate consolidate its holding in Airtel Nigeria, right? But I would say that this acquisition, this buyback program itself, might have been engineered, by a certain bank who is also following the directive of the CBN to sell off its non-banking assets. So being the largest minority shareholder, I would assume that it went to approach Airtel Africa, to perhaps, purchase its shares as against offering it on the open market, which might impact, negatively on the price of Airtel Africa. So I would say that it's a win-win for both, for everybody, because we're seeing the impact of that buyback program on the shares, for example, of First Bank, and then for Airtel, well, based on the article that was published, it is expected that the buyback program is going to deplete cash reserves by about 22 or 23% thereabout. But I mean, which comes to about 143 million US dollars, in terms of value. However, what we do know is that looking at the profits after tax for 2020, we noticed that about $17 million was attributed, to minority shareholders. This then goes, to the majority holders in the 2021 account. Of course, it's going to be prorated, based on the date of the buyback program, but then it means that it could also translate in the long run to a larger share price for Airtel Africa, because Airtel Africa is what is listed on the Nigerian bourse, while Airtel Nigeria Limited is what is being sold, and the majority.
Okay, so Abalaji, I just want to jump in there. So interestingly, following Airtel's announcement, we saw a rally in the stocks of FBN Holdings in particular. Is there a relationship there?
Absolutely. Absolutely. I just, I shied away from mentioning the name, but then, First Bank is the largest holder, is the largest minority holder in Airtel Africa. So the increase in the price of First Bank is definitely connected to the buyback program. It's expected that it's going to inject up to 60 billion, by way of funds into First Bank. And based on forward projections, we have a revised valuation of First Bank. In fact, one of the major deals that happened on First Bank in the market was the crossing of over 473 million shares at 16 naira, while the stock was still trading at 10 naira. It tells you that, that's an indication of the potential upside, upside potential of First Bank.
The Nigerian Exchange Group currently holds a market capitalization of 30.68 billion naira on the NASD, or listed securities exchange. What would this listing on the NGX mean for the NGX Group and the equities market?
Absolutely interesting. That was the biggest news of of the week, when we got to know that they're going to list on the NGX. It's highly welcomed. It's part of the effort to deepen the market. We've always been saying that the market needs to be deepened, and NGX is, of course, it's one of the top tier equities that we need to look forward to. What does this so why the buzz? Why are we so excited about NGX? NGX listed on the NESD, right, OTC platform at the price of 25 naira. In the last 3-4 months, it has seen its share price dip by as much as 40%. Now, unlike the NGX platform, the NESD is not as liquid as the NGX, right? Because most trades are over the counter. You cannot. It's not as flexible, as the NGX, and it does not have the kind of global followership that the NGX enjoys. So what this listing is going to do for NGX is that it's going to bring it, it's going to bring it to the fore. It's going to introduce it to a wider range of investor groups, and I see the share price, of NGX rising further.
Okay, so speaking of rising share price rising, just this week when the announcement was made, we saw the share price of the NGX on the OTC market climb by close the week at 22.63%. That was an increase to 16.15. 16 naira 15 kobo. It was previously trading at 13 naira 17 kobo. So what you're talking about here, I can actually see that, and that's why I'm mentioning this.
Absolutely. I as a person, did exit part of my holdings at 25. I've been trying to purchase the same shares, in the last 2 weeks. The moment I heard the news of the transition, of the migration, I've been trying to acquire it. I've been bidding for it from 35, and then true to what you said, it closed the week at 16.7. But that even hides what is happening even on the bourse, because if you look at the spread between the bid and offer, the offer was 17, and it wasn't supplied. That was why it possibly closed at 16.2. So what to expect? Expect it to continue to rise. We expect the price to continue to rise until the set day for the migration is fixed, and probably the trading on the shares is suspended on NESD.
Speaking of rising stocks and shares, I see that stockbrokers are also trying to discuss with the federal government on, in terms of raising funds on strategies to source long-term funding from the capital market. Can you expatiate on this, please?
Okay, so interesting, and I'll use that opportunity to encourage you to join our forthcoming annual conference. The advert is everywhere. It's going to be one of the things that would be speaking to, even though it's not part of the sub teams, but everything that we're going to be talking about would generally speak to strategies, in which the government, could use to potentially raise funding. And I would like to say that the recent publication on NNPC becoming a limited liability company might also be a pathway, that also speaks to our strategy.
Yes, you just mentioned that now. Just yesterday, President Buhari received the certificate of incorporation for NNPC Limited with a registered share capital worth 200 billion naira. Firstly, should we consider this amount as its current valuation, since we're talking about, money coming into the system and all that?
Absolutely not. Absolutely not. NNPC can never have a valuation of 200 billion. 200 billion is the registered share capital. It's the stated capital, it's synonymous with the amount, that you have when that you state in your capital base. It's an issue of registration. But you also have to have it. In terms of valuation, valuation is determined, using different models. And in the case of NNPC, would be looking at its cash flows, its profitability. You would agree with me that we already in the papers that sometime last month, NNPC published its 2020 accounts, and it did declare that it made a profit of about 287 billion. You cannot make a profit of 287 billion and still have a valuation of 200 billion. It's impossible, especially when you consider that the likes of GTB, the likes of Zenith Bank, the likes of even Dangote Cement, all have market capitalizations, between 800 billion and 1.5 trillion. So you would expect that definitely NNPC would be bigger, way bigger than 200 billion. And it's really exciting. We're all looking forward to what would happen to it. Thank you.
We're looking forward to what is going to happen. What does this mean for the investing public? Could you give us more examples how this is going to benefit the public in general and the markets?
Okay, so at the moment, the only way we look at things is simple. Right now, it's a limited liability company. It's privately owned by the government. I'm sure that stockbrokers, financial advisors, capital market operators would be speaking to the government about ideas, telling them to bring it to the market. That's what we talk. We are speaking to Dangote refinery. We're speaking to other multinationals to come and list on the boards. We want to be a part of history. We want to be a part of a great heritage, So Nigerians will be looking for the opportunity. We'll be hoping that at some point, NNPC would become public and the government might probably divest part of its holding, either by way of an offer for sale, which would, of course, put some monies directly into the hands of the government, or by any other arrangement, as would be deemed necessary at the point when it is considered. So that's the way it's going to excite the government, the investors. We would be hoping that at some point the government would sell its own stake, part of its stake, in NNPC, to the public.
Speaking of selling, the government selling its stake, part of its stake to the public, don't you think that the NNPC could be a source a channel through which the federal government can raise funds, from the capital market? We're talking about government looking at different sources of raising funds. Is this not a very good channel for the federal government to raise funds?
Absolutely, absolutely. You discover that I was actually addressing that strategy, it was when I was addressing the strategy that I made mention of NNPC, right? Depending on what the government decides to do, it's not exactly that easy. NNPC is currently privately owned, right? As a privately owned entity, the government can use it to raise funds. It's profitable, right? There are also other ways in which the government could use the current NNPC limited situation. It could divest parts of its holdings in NNPC limited. So there is a process called an offer for sale. It's going to sell part of its shares in NNPC limited to the public. Now the direct proceeds from that exercise would go straight to the government. I see, in as much as the investing public would like this option, right? I see it as a slightly complex scenario, given the political architecture of the NNPC.
Balaji, Balaji.
Yes, please.
I know that you got a lot to discuss right now, and I know that I'm going to bring you back on, in the show so that we can have a more robust conversation. But this is where we'll have to end it for today. And Mr. Balaji Nuruddin is the Managing Director. Thank you so much for coming on the program at Kadari Capital Limited. Thank you so much for joining us on Capital Market this evening.
Thank you very much. Thank you for having me. Have a good evening.
Now, turning over to the other news in the market, the Debt Market Management Office has opened its subscription offer for the October 2021 federal government savings bonds to investors. A statement made available on its website shows that the bonds are in 2 tranches of 2- and 3-year savings bonds. A breakdown of the bond offer showed that the 2 years FGN bonds will be due on the 13th of October 2023 at the rate of 6.89% per annum, and the 3-year federal government savings bonds will be due on the same date in 2024 at 7.89% per annum. So other company news, Pan-African credit rating firm Augusto & Co. has affirmed FBN Quest Merchant Bank's A rating with a stable outlook. The rating reflects the bank's better capitalization ratios, strong liquidity, acceptable asset quality, and improved profitability supported by acceptable asset quality. The credit rating agency says the organization's performance over the years have been reflective of good financial condition with a strong capacity to meet its obligations to clients. And that's it for today on Capital Market. Don't forget to join us next week. I'm Willie Bung. Thanks for watching.